The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Wednesday edition. This is May the 8th. And I'm here Monday through Friday, 11 o'clock till noon, Eastern Time, of course. 877-927-6648 is the number to call. The Dow's up 1, S&P's up 3. I'm going to do something today that is a little different to what I normally do. I decided earlier this morning that it's just time that I did it. So many questions recently, and also some questions from new subscribers. I thought I'd use this particular time to go through a bunch of things that probably I should have done over the 10 years I've been here many times. For some reason, I take certain things for granted, and you cannot take anything for granted. I always tell, just as an example, I always say to, whenever we're looking at movies, when we're with friends and I'm with my wife, and I always say, I don't know why they don't cut. It's more, much more. We don't know what they cut. We only know what they present. And that's the way it should be. You should be able to cut 80% to be able to produce the best 20%. So I always take it for granted, but that's not right. People don't know what's in my mind as far as the presentation of my opening call. So I'm going to do this, and it's very unusual that I'm doing it, but I feel that in terms of explaining not just the chart patterns that people call about, but what I do and why I do it, I'm going to give a little bit of a presentation here. But first, we'll run the numbers. The Dow's up 3 at 15,059. The S&P is up 311 at, it's at 1629. The comp index is up 11 at 3408. Gold is rebounding. It's up 16 at 1465. Remember, I like gold. I think it's making a very flat-based, long bowl, upside-down bowl formation. That means the majority of the move is being made. There could be a little more, and then it starts to flatten out with little spikes to the upside, meaning that the downside is contained, and that there might be a range here that we can start trading something like the GLD or even the 200% short and long as sells at a certain point and buys at a certain point and stay in that range for at least 28 to maybe 30, 38, and then maybe even longer number of bars to the upside. And we are going to possibly be looking at the euro performing with gold, not great, but okay, to the upside if the stock market continues higher. But we're getting to a point here, and I'll explain it as we go along, where we need to be a little bit more selective. I'm not going to be saying cautious to the extent that you've got to go short anything, but I would say selective because the buying pressure is there. In fact, Cramer, I love listening to Cramer when I get a chance because I don't necessarily follow all the things that all the stocks, but as far as presenting, to produce a 1 hour show, let's call it a 43-minute show with all the commercials and everything, every single day of the week, and he does it every day, every year, throughout the year. Even when he's on vacation, he prepares all these shows. I followed him since the mid-1980s. I don't know of a single person. There are, I don't know them, but I don't know anyone who has the market intuition, the market savvy, the market experience, and the way of articulating, even if it's really hard. Whenever I put it on, my wife is here, she says, do I have to listen to that screaming? But it's not that. He's so enthusiastic, and he's got kind of a high voice, so that's what happens. But it's what he says. When he used to write, I haven't for maybe 10 years now, I haven't looked at TheStreet.com, but when he used to write, when I used to read that, there was a certain phase where he was writing about, I think it was 3 or 4 hedge fund managers he made up, and he would go through the psychology of why they would be buying going into, it was before the crash of 2000, right? Why they would be buying, what was in their minds, how they had to play catch up, all that. It was really clever. Anyway, last night he was talking about how fund managers how the fund managers say, for instance, he wanted to buy EOG. If he wanted to buy EOG and he wanted to buy 200,000 at the close yesterday, the whole psychology and the thinking, it was brilliant. And just to my knowledge, and I don't know that many fund managers, I mean, not hedge fund managers. I know some, but not many. I think he just nailed it. And that's the reason why even today, when you would expect that there'd be a pullback, why wouldn't there be a pullback? Buying comes in after the dip. I'm going to go through things now that I would like to. I would like to. No. Look how long he kept people in Apple. Look how long he kept people in so many stocks. I love that. That's fundamental, and he does do technical work, and I know he looks at charts. But as he says, he's not a chartist per se, he's a fundamentalist. So I wanted to use the concept to say I'm a technician. And I'd like to show you some of the things of why I've been thinking what I'm thinking, because I've had so many questions about it. So now here we go. Gold is up at $16 at 14. Is that right? Yeah, 14.64. Silver is down 9 cents at 23.71. Platinum's up 14 at 14.97. High-grade copper is now up 6 at 3.37. Okay, that's good. Crude oil is up 47 cents at 96. And now we've got bonds up a half a point at 146.22. I want to talk about that as well. I don't think. I'm absolutely sure that for many fund managers, for many portfolio managers, for many participants in the stock market for a long time, their focus has been that yields would skyrocket because that's the only place they can go. And my belief has been that we're in a period that I call the Japanization of our bond yields. This is so different to Japan. Japan never got out of the morass it was in. It was in for 20 years. They didn't come even close to a halfway point in the rebound from 39,000, from 38,000 top. So, no, maybe a half, 50%. But this is so different, and there could be a reason for that. Now, this is what I wanted to say. Dollar right now is down 52 cents, and the euro is up. So I'm going to go through these charts. I want to show you something. If I can find it now. Where did it go? Let's see. Am I there? I'm there. Okay. I believe I'm there. Let's see. Hopefully I've got the right thing going here. Taking a little time. Yeah, there it is. Okay, I'm sliding it over. Here we go. In my opening call, there's a section called the Traders Corner. I'll go through actually, you know what I'm going to do? I'm going to go through this. I'll talk about it, and then I'll show you how you can get to it. The Traders Corner is the section that I send in last. I start sending my posts to the one at a time to the Tiger site, Chapman Wave opening call methodology. The opening call is the title of my newsletter. And I start sending charts out from about 6 something in the morning, and they just keep going until I'm done at 8:35. 8:35 is where 8:30 to 8:35 the Traders Corner goes out. I give a brief this opening paragraph, brief summation of what we're looking at. Sometimes it's more comprehensive, sometimes just general. Sometimes I add things that I might not even have a trade on. Here I said even the EEM. The iShares Emerging Markets ETF is soaring in leg D. The EWJ I've spoken about recently is doing fantastically in Japan. I show the Dow diamonds here on the left. This is a daily chart. See how the stochastics at 90%? That is good. The MACD is starting to expand. That is good. Way above the 9-period moving average. And we haven't in 3 sessions, today's the third one, so far, taken out the 149.20 level, the support after that gap up to peak C, to leg C, and then peak C. So all of that is a positive. Right, that's number one. So I always show that every day, and I give an explanation. I also give an explanation of the 120-minute chart, the diamonds, the Dow, just a whole slew of things. So this is the final thing that goes out. If you don't have time, this is all you need to get. And then later in the day or the evening, you can go through the other stuff. So I always have the diamonds, regardless of whether we have a position or not. That is the long position that is the Dow. That's how you can trade the Dow 30. Then we have now the DDM. What is the DDM? The DDM is 200% long the Dow. let me just go here. In the DDM, we are long. We went long less than a week ago, Thursday morning, just after the opening when it pulled back. We went long at 89.62 on the 3rd of May. Look what's happened. You've got in peak C, you've got a pullback, you've got legged D unfolding with the MACD at 94%, the stochastic at 94%, the MACD expanding. The 120-minute chart is still making leg C up. So because of that, I figured that today there's a chance that we could still get a continuation of leg D. Leg D is what you want in the Chapman wave. That's when you want to decide whether or not you want to take something off, when you want to go short, a whole bunch of things. That's what I discuss with subscribers in much greater detail in my overview and other areas. So the weekly chart is in a phantom leg D. It's really peaks a leg C, but I'm calling it a phantom leg D. I don't want to go into that right now. And the monthly is in leg D, unlike the Dow, which is in leg C. And there's a reason for that, and that's because in March of 2012, the high of 71.53 was just undercut at 71.43, 10 cents difference. That 10 cents in my work makes a big difference, and that big difference is the really big difference is that I'm now ahead in the diamonds on the DDM, but not the Dow diamonds or the Dow itself. So the DDM is second. It is not the root. So it's going to have to, I'm going to have to parlay that information and diffuse it by looking at C and keep thinking C in the monthly chart of the Dow and the S&P and the diamonds and the SPY. That to me is very important. So we're in on that bar there, and now we can make decisions as to what we want to do. We're up about 10%. In just less than a week. That's fantastic for an index. You can do that in stocks, but indexes, that's big. And there's strength. So how we deal with that, that's what I discuss in my opening call with my subscribers. Now, am I going to be able to get that again? Yep, there it is. The next thing is AZO. We are long AZO. Now, I'm mentioning these because I would not recommend anybody get into these right at this particular point, because the best entry level for risk reward has already been used up. We're in at 406. I think it's 406. Maybe it's 407.09, I believe. 407.09 on the 3rd. That's right there. So now it's up really nicely. It's up 12 points. It's a nice gain. And the stochastic's at 96% and the MACD is still expanding. That to me is really important. So I like this position. There's a way that we will trade it. There are different things that we can do. But so far what it's telling me about the AutoZone is part of the car and truck parts business. But it's also moving with Ford, which we are long. And that's the actual auto business. So this is really fascinating. I will be back. We'll be taking callers as well. Brian in Jackson. We'll be back straight after this break. The Dow's up 13, S&P's up 4. Basil Chapman.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. Basil Chapman, Tax Conditions Hour. Dow's up 13, S&P's up 4.16, Comp Index is up, I think it's up 12. Yep, it's up 12. And I just wanted to show you here, this is the front page of my newsletter. It's got Chapman Wave, and the opening call, and then you have to click on. Takes a split second. And as they come up, it'll be the Dow. This is the first one I send in the morning. Dow soars in leg D. An explanation of this chart here, if I can just quickly find it. There. Every day we follow remember the Chapman Wave is the waveform that never sleeps. I'm an advocate of the Chapman Wave. I have to be. Not many other people are, out there, because not many people know about it. So I have to do it myself. Now, the most important thing about it is we've broken that trend line. So this is a very strong leg D after a very strong leg C. And I discuss it in terms of techniques, etc., etc. Then my overview section, a very detailed report. Look at this overview, and I'm going to my calls in a moment. I just wanted to do this because it is such an important moment to be able to explain. In the overview section, look at this. I give a very detailed report. I show the 5 quadrants. I love to call them 5 quadrants. This is leg C in the Dow. So it's still got to go to a leg D in the Chapman Wave. So it's still very positive. It doesn't say how high, it just says it's positive. This is the volatility index. It is horrible. Look at it. It's 12.83. For us, it's fantastic because it's buying pressure, but it's acted very poorly if you're a bear. If it goes into the 15s, another story altogether. It's at 12.8. It's not 12.83. It's about 12.82. The TRIN index, I'm not using any of that right now. It hasn't given me any signals. Leg D in the daily Dow, leg C continues in the S&P. So each one of these things is very important. And I go all the way through each of our stocks, what we're looking at. This is just today's list. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. If you trade the E-minis, this is a fantastic thing. The 120-minute chart and the daily chart gives you the trends. It's really important. That's just today. You don't have to go through each one. You just go to Traders Corner if that's you want, or the overview, and you go straight to Traders Corner when it comes out. Same thing yesterday, all the different stocks. Well, let's go to Brian in Jackson. Hi, Brian. Thanks for being patient.
No problem, Basil. Thank you very much. About 2 weeks ago, I called you and asked you I had taken position in Alcoa.
Right.
And I got in at 825, and I was going to ride it to 850. Well, it popped about a week. Well, last Friday it popped with the market.
Correct.
So today's in ex-dividend day, and I don't know if that's why it's up so much today, and I'm trying to decide whether I take profits or not.
Today is ex-dividend day, and it's up 15 cents? It should be down.
Well, no. Today is a day that you have to hold it to get the dividend.
Okay. And dividend comes out.
I take that back. I'm very sorry. I'm wrong. Tomorrow. I'm sorry. That's my mistake. Tomorrow is ex-dividend day.
Oh, good. Good to know.
Tomorrow.
Okay. So ex-dividend day. Just give me 1 second here. It's ex-dividend day tomorrow. The payment comes out. When does it come out of the stock?
Tomorrow.
So for those who are holding Alcoa today, tomorrow sees the dividend come out, and you will be paid if you're holding it today.
Correct.
Okay, because sometimes... Right. So what I'd be looking at, first of all, I think that even with the dividend coming out tomorrow, that shouldn't take it down more than to the 850s, although the dividend is, 15, 18 cents or something? How much would it be? Maybe more.
It's not even that much. It's a very small dividend.
It's a small dividend.
Yeah, it's like 3 cents or something.
Now, as we were looking at it the other day, I'd say to you, my thinking is that you probably are in at a good point. We will know soon enough if it pulls back to retest. I think under 8, I think I said it was. That was number one. And number two is, I said there's a chance. And I looked at it, and believe me, the way it's moved so quickly should have been a tip-off to me to just grab it, because waiting for a pullback was the wrong thing to do. In this rotational market, one of the reasons why I don't think we get the sell in May, other than a sudden, very short, quick jab to the downside, I don't know how long it'll last for, but not the big sell, is because I think this is a rotational stock. I think you've got pretty much the low. Well, we'll see. But my thinking here is that you could very well have gotten the low for this phase. Whether it's the low for Alcoa over the coming 2-3 months, that's going to be another thing. If I had to venture a guess, I'm going to say yes, but hold on, because, we've got a whole bunch of callers online. I want to look at Alcoa a little bit in deeper detail, because it's just touching the 200-period moving average. I want to explain to you what I'd be looking at, because it's only leg C. It should go higher. So hold on. We'll be back with Brian Jackson, Arian Arcadia, and Freeman in Dallas right after this break.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of tfnn.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of tfnn.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. The Dow's up 8. S&P's up 3.96. I suspect we're just bumping into resistance area. I'm anticipating by tomorrow or Friday we get that peak C in the S&P. And then we should go to leg D, and we will make decisions about that afterwards. We're on with Brian Jackson. We're looking at AA. Alcoa is trading at $8.79, up 14 cents. Had a fabulous move, gone from the 790 low on the 18th of April, and it just went in leg C right to the 200-period moving average, bumped into it, and now it's resting. 120-minute chart, A, B, C, D, E, yep. So I'm suspecting that Alcoa, because of the dividend tomorrow, ex-dividend tomorrow, would pull back, make peak C, work its way higher towards maybe the 882. The high today so far is 880. So it goes between 882 and 8. Let me just check that out. There's no real guideline there. Maybe 837 to 842-ish area. In other words, not that much higher. And then it consolidates a little bit more. My suspicion is that 840 to 830 area is just going to be fabulous support for the stock if it gets down there. that's my thinking. Now, if the general market has a very sharp pullback next week sometime, if it starts next week, and it's a sharper pullback, then obviously Alcoa will be vulnerable. But I'm looking at this and I'm saying the monthly chart is terrible, but the weekly chart has had the kind of pattern that I like. The H that goes to an M, breaks to a low, and that bar pushes right back into the arch formation, and it's gone above the previous left side high peak of 870 the week of the 15th of March. It does target the potential for 937, but I think that's going to have to take a little while. I like your entry. So your question is where is it and what am I looking at?
Yeah, so my question would be, I guess you're looking for a small pullback before it maybe hits 4.9 or 9.50, that area maybe? I mean, you're looking for a
small pullback and then go to that area.
Mm-hmm. I'm thinking I might go ahead and take profits then in the next couple of days. And then
are you looking? Again. So are you looking at it as a very short-term trade or longer-term trade?
Well, it's all gravy now. 850 was my first target, and I've just been kind of watching it. Yesterday was an inside day, and I was kind of scared, but this morning it popped up. So I'm thinking I might go ahead and take some profit and see what happens.
Okay. So then, I want you just to think about it. I don't want to change your mind at all. I just want to present to you another way of looking at it. If you can keep a core position because your entry was so good, take a chunk off. Absolutely. Try to keep it just a little bit of a position. It's like your pilot light. It's giving you a real good feel when the market's going up. Does this participate? When the market comes down, does it hold or go higher? That's the kind of clue you won't get if you're just looking at it every other day. But if you have the stock, you're going to say, wow, that is fabulous action considering the market has pulled back 1% to 1.5%, and yet my stock is up 0.25%. That's the way I want you to look at it, because I think you're looking at the rotation starting to go into the alumins and maybe the steels. Look at the way X has participated just recently. Same thing, fabulous move. So I just wanted to mention that. Think about it. I don't want to change your trading style, but I want you to give you a perspective, okay?
Thank you very much, Basil.
Thank you very much, Brian, and congratulations. Fabulous trade. Let's go to Ari in Arcadia. Hi, Ari. How are you?
I'm doing very well, Basil.
So,
I'm looking at LINE, a high dividend stock. But what really interests me is the candle that they did three days ago.
Yes.
And also the relationship of the candle on 219.
Okay.
Once it sets the bottom, I would like to trade it on the 120-minute scale.
Okay, so let's do this, Ari. What I'm looking at here, LINE is LINE, is Lin Energy LLC. It's just this is really a stock that I've looked at for so long. I never know how to trade it because it has these thin little wicks, and then it closes at the high. Sometimes the thin little wick and it closes towards the low. But it's an extremely volatile stock for a $34.60 stock. The way it trades every week, especially if you look at it as a swing trade, it's very volatile. Now, Ari, I'd like you to look at the candle in the monthly. I'm showing it here for Tiger. If you're looking at Tiger TV, the monthly chart,
yes,
this very long wick. Now, this is the May that crash, the flash crash of May of 2010. What I normally do with these charts is I X them out because that is just an aberration. I don't want to be, as a chartist, of course, I want to look at every price point, but as a chartist, I better recognize when there was something like a bad tick, which this is really looking like. But the most important thing is the action afterwards continued that fabulous move to the up. Why? Because the fast-moving average was way above the MACD. If you look at it now, the fast-moving average is below. If you look at the monthly chart, the same kind of candle, but this one is a legitimate candle of February of this year. We are deep into the wick, and it looks like we're going to test the 34.27 low. So far, the low is 34.50. 34.27 low of March. Now, here's the other thing. The Roman candle of October of 2011, which in a way is a positive Roman candle, but if the price gets into halfway, it has the same principle as if it was a red candle. So if Lynn goes into 33.44 at any point in the next week, I would be very careful. Now, what I like to think of in terms of dividend stocks is I like to look at the stock. I'm not interested in the dividend. If the stock is looking great, it's like a preferred stock. If you can get preferred sometimes instead of the actual stock, like J.C. Penney, the preferreds, I haven't looked into it, but I wouldn't be surprised if the preferreds are a much better deal than the stock itself. So in terms of the dividend, I would not buy a stock and I know you wouldn't either, for the dividend if I felt it was going to go lower. So now we've got to look at it and say the weekly chart made a peak F top. It's had various candles of different configurations, but the most important was the Roman candle of October of last year. It took out 39.15, and that was it. It's only tried to test it once or twice, 39.47 back in April, couldn't hold, and it gapped down. Now, I don't know what the gap down is all about, but I do not want to see a 10 or a 15% decline in my principal just because I'm trying to get a 4 or 5 or 6% dividend, and that, my principle involved in that. I want the stock to be looking good. So this is what I'm going to recommend. I know you're looking at the candle. This is once again kind of a Roman candle of the 6, which says it should test the 34.26 level. It's at 34.68. What I would do, Ari, because the 9-period moving average, let me just look at it historically. This is the first time it's come back to that Roman to the 200-period moving average since the week of after the flash crash, where it retested, and it was the week of the 21st of May of 2010 and May the 28th. Before that, that was an area of resistance. Now, I'm showing you the charts right here. So this is what I'm going to say to you. I think it's worth missing a little bit of price movement to feel that you're not catching a falling knife. It's got a huge volume. Why is it gapping down? Why did it gap down the other day?
Ex-dividend date.
So was that the ex-dividend date? So it gapped down on the ex-dividend date?
Basil, I think the traders on this are very sophisticated, and they should know how to take money. They're really good traders, the people who trade on this.
Okay.
So, they've been taking money all along. They took the money, they got the ex-dividend, and they left out. They're really, really good traders.
Okay, so what you're looking at is this 200-period moving average of around about 34, let me just see, it's been covered, 34, 36. That area should become some kind of a support, and what you're thinking is that this stock has a habit of trading back up to from wherever it's been, and it could very well trade towards the 37 to 39 area?
Yes. And
okay.
I'm going to get rid of it there.
Okay, now we're on the same wavelength.
Say that again, Basil?
Now we're on the same wavelength, but I'm going to suggest you wait one more day. Well, you have two choices. One is you could just nibble now, and you're appreciating that it's going to go under 34.26, but the bar that goes under 34.26 has to actually rebound within 1 to 2 days and go right back into the 34. I'd even say 34.70s. I don't want 34.35. I want 34.70s. If that happens, then it will form a base over a period of a couple of weeks. And I know you're prepared to look at a 1-point loss or a 1.5-point loss if you're looking at the right perspective. So let's see. Art in New Hampshire says, Basil, it was a Barron's article that brought it down. Oh, okay, fine. That's as long as I've got some kind of context here. So, Ari, this is what I'm going to recommend. I think it's in a trading range. But there is a chance that the trading range could dip all the way to the 31.003 low of October of 2011. I would prefer for you to have a little patience. You could nibble now, but the actual position itself, I would much rather buy it when the trend has changed and I can see the MACD and the daily improve. I can see the stochastic go from 25 up to about 33. So nibble, but not the position. And why don't we look at this again together? Today's Wednesday, maybe Friday or maybe Tuesday of next week. But in the meantime, I would not do much more than nibble.
Thank you for your help, Basil.
Thank you very much. That's Ariane Arcady. We were looking at Line as a symbol. It's a Lin Energy LLC. It's just when it has a big move, this thing, it just has a tremendous move. It can quite easily travel 10% or 11% in a week. It just does that sort of thing, up and down. Let's go to Freeman in Dallas. Hi, Freeman.
I got a signature for job number 640.
Whoops, hello. Hello, Freeman. Was that Freeman? I'm just wondering if I got part of a conversation. Well, Freeman, you wanted to look at KBH, that's KB Homes. Just go, if you're there, just yell out, even if I'm busy talking, just so that I know you're there. KBH. I also want to look at this one. Why? Because it's got a leg C and then going to a peak C in both the daily and the weekly and the monthly. But there is an alternate count in the weekly, and I don't have any alternate count in the daily. So I like the stock. KB Homes is trading at 23.70, down 97 cents. I like the stock in terms of it holding the 9-period moving average, having the fast moving average of the MACD still quite strong, having the stochastic very strong at 93%. I suspect it's going to go to D above 24.79. I think it's going to go to 24.83 to 25, maybe 15. I don't think it's going to do all that much more. Now, I'm thinking, that's not to say it will, I'm just thinking out loud. The 120-minute chart has got A, B, C, D, so it's pulled back from peak D. I think that the gap down towards the 23.17 level is possible. My suspicion is that the low of intraday today at 23.35, I think that might hold, and it's going to try for the next step up. So, Freeman, if you're long, what I'm going to suggest is stay long. But you've got to be very careful. The moment it breaks over, if it breaks over 24.79, you've got to raise your stop on part of your position, and part of that position, I'd raise it quite tight. And it's not that I'm negative right now, but I'm looking at the overall market, and I'm getting a sense that we're getting into some kind of a toppiness, and I think next week I will get some kind of a signal. If you are short, excuse me, same thing applies. If you got short earlier, I wouldn't. If you got short at 23.44, that's a little bit too much. 24.79, 24.80, I don't want to mess around. But if you're thinking of going short, wait until leg D comes. That's the most important thing. So let's go to Mark in Fort Collins. Hi, Mark. How are you?
Basil, how are you?
Very well, thank you.
I went long with some calls on the GDX yesterday when it was about 28.70, and I'm up $1.10 in GDX points and quite a bit more on the options. Wondered if you, and I was doing that based on what we're doing with the gold trade in your newsletter. I thought maybe we could also get a pop in the gold mining stocks. What do you think about this?
Okay, two things are going on. One is I didn't have a chance last night to scan through a whole bunch of the gold stocks, which is what I usually do. But up until yesterday, they were performing very sporadically. A couple were moving nicely, and a lot were just terrible. What I'm looking at here is the GDX, which is the ETF. It is the Market Vectors Gold Miners ETF, trading at 29.79, up 94 cents. I think you've got a great entry point. I like it very much. I think it's going to go higher. My target would be 32.61 over the coming week or two. Hold on, and I'll wrap it up as soon as we get back. Hold on, Mark. Let's see, the Dow's up 14, S&P's up 4.5. We'll be right back straight after these messages.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Just before we do anything else, I had a question, email question. Google, yes, Google's in a very strong leg leg C up, so you still got D to come. Leg E, I believe, in the weekly chart. Only leg C is recycled into the monthly. This is a fantastic stock. This is probably the stock of the era. We've got also NVIDIA. Congratulations, zip in the den. Yeah, it's calls on NVIDIA. I have a target of it. It's at 13.94. It's at NVDA. I targeted at 14.22. We're going right back to, we've got Mark in Fort Collins. Hi, Mark. So this is what I was thinking. The GDX, I like the action here. This is the first time that it's actually shown me that the pullback had rising technicals instead of fading technicals. I like it. I believe that it's going to try to target. So you've got calls on it, right?
Yeah, so, June 28th.
Oh, great. You got June. You don't even have to worry about May. So June, I'm looking at this and I'm saying the moment it breaks 31.27, then the gap down low of the 12th of April at 32.11. 32.11. Yeah, 32.11 will become a target. That's really not the issue. The issue is that the weekly chart has made a peak A and it'll start to climb into leg B. That's the first time it's gotten to a B in almost a year. No, into 8 months or so. That'll be the first time that it's even had the strength to be able to rally. So I like it now. I didn't before. Now I think it's starting to pick up energy. And if it goes over 31.27, it starts leg B. And then 32.63 becomes the 9-period moving average target in the weekly. It'll fail if it breaks under 28. I don't think it's going to do that. So congratulations, and the dollar's getting tanked. So thank you for calling.
Thank you. Bye-bye.
Good. Let's go back to Freeman in Dallas. Hi, Freeman. How are you?
Pretty good, Basil. I shorted KBH when the slow stochastic was in the 95 there. And my question is, I was trying to hold until the slow stochastic goes to the lows, but I'm worried about that 9 EMA support there.
I would be worried only because I've got a peak C, and you know in the Chapman wave we always expect a D. I was saying to you before, whether you're long or short, I wasn't sure, but what I was saying, I would probably say to you, now this is tough for me because tomorrow the KBH could just suddenly tank and go down to 22 and fail at peak C but it doesn't fail. At new highs, you usually get a D, at least in the daily chart. So I'm going to say to you, think about it, you don't have to do it right away, but I would probably exit the trade, and I would exit the trade if it gets to maybe 20, it's a 23.69 KBH. 23.81, you know what? I would say, wait a minute, I'd rather have a chance of shorting it after it makes leg D at 24.80. And if it fails, then it fails. But the MACD, as you say, MACD is strong, the S&P, the stochastic is strong. I don't see this as a short. I see it as just a quick pullback in the 120-minute chart from an ABCD top. But other than that, I think it's going to be pushing higher over the next coming days. I'd rather see you short it a little higher, and that way you can have a small position, and you can have another position slightly higher, and then your risk reward is much stronger. But even then, the weekly chart is still very good. I would only treat it as a short-term trade. So I hope that helps you, Freeman.
It does. Thank you, Basil. Bye-bye.
Thank you very much. Folks, let's just do this. I wanted to do this for a moment. We've had a number of people give major sell signals. I'm talking about the guys that are just known throughout the technical world. You know, Tom DeMark, what happened to that 13.9? These things don't always work. And I have to just say, I never like to talk ill of others. They have great techniques. Nena gave a major sell signal. These are people that have a lot of tradition behind them. When the market fails to recognize what these people are looking at, I have respect for the market, and I believe that we've got a little bit further to go on the upside, and that's my stance. Tomorrow I'll go through some of those positions again in more detail, and thank you for being here. Please stay tuned for Larry Pesavento. Larry, of course, great technicians all the way through today.